of trading. Actually, they have been very interesting, and we are going to start, as we usually do, by looking at the indices. I mean, the whole idea of everything we do, we are trying to buy the instruments that are particularly strong, and we are also trying to match it up and align it with the weak currencies, and this way we can create any of the pairs that we feel are going to be supporting to us or supportive to us in our trading next week. Just take a quick look at some of the trades that from last week. You can see that the dollar yen, we're basically short from 79.40. The dollar CAD, we're short from 98.15, 51. The pound Swiss, we're long the pound Aussie from 154.40. We're long the pound CAD from 157.80. The structure point on the pound CAD is 158. $158.40. The Aussie dollar, we're basically long from 103.94. It is now 104, even though we had some pull-ups or pullbacks in the Aussie dollar. We're short the Aussie Swiss. We are short the Aussie yen. We're long the Aussie CAD. Of course, you want to make sure that you're not upside down on your position. But anyway, this is the radar screen from last week, and you can see the and I'm showing this because we have new members joining us today. Anyway, as we start every week, we look at the indices, the currency indices, and this is the basket of the currency itself versus all the other currencies. And we start always with the chart for the US dollar. We put on a weekly chart, and the way, once I am done with the analysis, these are the names of the pairs we have. We give each of them a degree, let's say 2 minuses, for example, like in the dollar means it's very weak. Plus or minus, it is, if the minus is first, it is slightly bearish to neutral. The pound, for example, is slightly positive. The Swiss franc was very strong, and we also had the euro was very strong from last week, and the yen was kind of weak or neutral. And this way, once we identify and grade each of our individual indices, we begin to pair them up. So, for example, there is no reason for us to buy the euro Swiss. I mean, both of them are particularly strong, even though they are linked together, but as an example. But I can do go long or short the euro dollar, or long the euro dollar, because the euro is going up and the dollar is coming down. I can do the euro Aussie. I can do the euro yen, long the euro and short the yen. I can do, for example, the Swiss CAD, or I can do the Swiss yen, go long the Swiss, short the yen, long the Swiss, short the dollar. All these are certain pairs that I can use based upon the hierarchy and the grading that we do in the indices. Okay, so having said that, this is the chart of the dollar from last week. You know that a couple of weeks ago or a week ago we had basically the easing that started with the Federal Reserve Bank, with the extra liquidity they're bringing into the market, and you can see that the dollar has sold off. That's the week before last, right after the FOMC made the announcement. And this is, I'm just going to move the ellipse, this ellipse. Now, this was the week, the big red candle, this was the week of the announcement. Okay? Now, last week, we did actually go and trade below that structure point, which is the 79.18. We placed in a low of 78.83. That was the low of last week. And then we came back right back above the 79.18, and we closed the week at 79.39. And as you guys who were with me in the mentoring room last week, you remember I was telling you I sent this thing for CNBC that we do have a buy signal on the US dollar because it is still above the 79.18, and this is what I saw on the chart, on the daily chart. That's why when I sent the email to CNBC, that's what I said to them. We do now, because coming back above that structure point, as you can see, Paul, we do have the beginning of a turtle soup kind of a short covering rally, and you can see that this candle here, this is actually a buying candle. This is like what we were talking today in the course of Khalid. This, any candle with a wick, even though it is a negative for the day, but here that is a sign of strength. But in this location, the location of this candle in particular, right after breaking below the 79.18, look at this, it went below the 79.18, and this is how it turned around and closed for the day. So for me, this is actually quite a strong buy signal. And again, it's not change in the fundamentals, but that would probably lead to some short covering to the upside in the US dollar. So this is quite a buy signal, and again, as long as we're above the 79.18, so we're going to look at this week as buying the US dollar. So we're going to, it is a short covering, so I'm going to give it one buy signal as 1+. So I'm looking to be buying the, it could be leading to a good short covering rally. Now, the other currencies that we had from last week as a strong currencies was the euro. So we're going to follow on that process, looking at the euro dollar. And again, with regards to, with regards to the euro dollar, we did actually push up last week all the way towards the structure point, which is the 131.91, and the high that we did place in the week was the 131.79. We did not break above that point, and the second day was the 131, I think it's 83, yes. But in either case, it is pretty close, but no cigar. We did not break above it, so therefore there is no failure. It hasn't failed. The point of failure is when it breaks above this and it fails, people get dismayed and they start changing their direction, and they change their biases. But since we don't have a failure, then we're looking for continuation. Then this will automatically become, we are going to look at that as a gift, because I didn't have a failure. So that move would be, if it went above the 139.91, then it becomes a failure, and we're going to assess it in a different way, and you will be able to see the difference between what I'm saying here, and I'm going to show it to you now with the British pound. I'm going to put the chart of the British pound and take a mental picture of this, and now take a look at the British pound. See what happened here in the British pound? That is my structure point. Now we went above it and came back. That is a failure. And that setup is quite different than the setup we have in the euro. Here there is a failure, and now people are beginning to change their bias, or can consider changing their bias and going into the opposite direction, because this is a failure. But in the case of the euro, we have not broken above that structure point, and therefore it is now considered a gift, and at least we're looking for one more push or one more attempt towards the high. We will also be looking at the euro dollar to see if something happened in the euro dollar. So I want to get to the euro dollar chart independently. And this is again the other difference. If you look here on the euro dollar, you would see that in the case of the euro dollar, we did trade above that. This is 131.45. On the index it is 131.91. It is slightly different, it's slightly higher. On the index it is slightly higher because this is the basket of all currencies. It's not just the euro dollar, it is the basket of all the currencies. So it hasn't yet failed. So we might get a move in the euro Aussie, we might get a move in the euro CAD, we might get a move in the euro yen. But in the case of the US dollar, we did go above the 131.45 and we began to pull back. So it's still a gift theoretically, but we, even if we're going to say that the euro is going to push higher, this will actually confirm what I'm saying, that we do have a buy signal in the dollar. Because now if we have a failure in the euro, so if I'm going to go long the dollar, well, this means that there is no reason for me to go long the euro dollar, because this means I'm going to be buying the euro and shorting the dollar against it. And as you can see from the chart, we do have a failure, so that does make it a real candidate for us to be taking the euro dollar. We will use it on a secondary base. Okay, so we are going to say that the euro dollar, going back to our chart, is neutral to positive. So the way we're going to put the euro dollar, it's not going to be that strong. It's no longer going to be that strong. We are going to it's going to be plus or minus slightly strong. So we're going to be neutral to positive, but our bias is still to the upside in the euro. The next one we're going to look at, which we did actually partially look at, which is the British pound, and I'm going to do that so I can remind you of it. This is what the pound is, and this is a little bit tricky because, as you can see from the chart, from 2009 all the way through, we have been in this narrowing, contracting triangle, and we have identified last week the 162.63 as our structure point. That's why I have this big box pointing at it. And we said this week that, of course, if it goes above the structure point, this thing should be a trend change to the upside, because right now as we stand, if you look at the chart, the major trend is still down. The pound is still down. But if it gets above the 162.63 and it closes above that, then the trend has changed from being a downtrend to being an uptrend, because that is the structural point. But unfortunately, this is what happened. We just poked our head once, twice, 3 times, 4 times. Last week we had 4 attempts to break above the structure point, and we have failed 4 times. So that is a negative sign. We will be negative on the pound, and our buying signal will be easy. If it gets back above the 162.63, it becomes a buying point and we'll take it to the long side. But until then, until a trade above the 162.63, our bias to the pound would be negative. So rather than being slightly positive, we are going to be negative to the pound because I do have a failure in the pound. So the pound would be, we will be negative on the pound. Okay, the next one we're going to, we have the we did the dollar. So the next one we're going to look at is, these are the 3. We need to look at the Aussie also. The Aussie, the next one, let's look at the Australian dollar. That is a unique case, or a brilliant case if you will. And this is what's happening. We have been, since April of, or July of 2011, for the whole of last year, that was the highest price that we put in July of last year. And since then, we made 1 attempt that failed, 2 attempts that failed, 3 attempts that failed. This is the 4th attempt, and this 4th attempt is actually the highest ever for the Aussie. This was, and this is the index, 105.37. This high here is, this is 105.66. Now this here is the highest ever traded, which is 105.66. So we actually did come close to it about last week. We went, put a high based on the index as 105.37, but again, it's like what's happening in the British pound. It's another failure, and every time it goes above a structure point and it fails, all what it does, it makes the traders who are long or have an opinion to be on the long side of this currency begin to get dismayed, and therefore they are going to slowly change their mind and slowly begin to go short the Australian dollar. And these are all sell signals. So, and then if you look at what happened during the week, as soon as we had the failure, we had a big capitulation for 2 days. We had a pause, then a further capitulation, and then it came back above the 103.50, moving above the 103.89 structure point, only to flip. That is a flip on Friday, which corresponds with the strength or the buy signal that we have in the US index. And that is actually a sell signal. It's another sell signal. That is a sell signal in the Australian dollar. It is a sell signal based upon the location of the failure. It is a sell signal on Friday because it came below the Thursday high and the Wednesday and the Tuesday highs. This thing is a failure above those last 3 daily highs. So that is a big failure. And we do have now a pretty close of a sell signal. So my bias on the Aussie now, based upon what we see, is to be short the Aussie. So our bias for the Australian dollar right here is going to be short. Not, it's still, the trend is up, so we're going to be 1 short AUD. So we're looking at shorting the Aussie dollar. Okay. Now we go to the Japanese yen. the Japanese yen and the Australian dollar are the two technically strongest, even though I said we want to short the Aussie. That's a short-term short, but until we don't have a trend change to the downside in the Aussie, but we do have a sell signals. But the Aussie and the yen are the two technically strongest currencies in the world today as far as the ones we are trading. And you can see we are pretty much in an uptrend from 2007. You can see the movement that we have in the Japanese yen, and we're pretty much up here. We don't really have any sell signal or anything that says we do have a trend change, so we're pretty much positive on the yen. And if you look at the weekly chart, this is actually a pretty good buy signal on the yen, and this is a pretty unique setup also I would like to share with you. If you can see this red candle, this is a major sell signal. This is a turtle soup ball. This is one turtle soup from the 129.12, and it's another turtle soup from 128.61, and then it is 1, 2, 3, 4, 5, 6 week sell signals, which led to a further capitulation all the way down to 126.32. And then what happened? It stopped coming down and it started coming back above 2-week low, 3-week low, 5-week low, 6-week low. So it came back above the last 10-week lows. That is something that wants to go up. And if you look at the daily chart, there is the sell-off that we had in the 3 days, and that is the turnaround in the yen, and therefore we're looking for the yen to continue higher, so we should be buyers of the Japanese yen. So with regards to the yen, we are no longer negative to the yen, but we are going to be positive, maybe double positive yen, the Japanese yen. Okay, then the next two that are left are the Canadian dollar and the Swiss franc. Let's do the Swiss because it moves pretty close to the euro. It pretty much moves in step with the euro dollar, and this is what we see. And just to remind you of the euro dollar, that's what the euro dollar looks like. We didn't have the failure in the euro index, and we're having a pullback. That's the chart of the Swiss. The Swiss now is actually weaker than the euro, and it is moving in the same direction. So if I have a buy in the euro or I have a buy in the Swiss, then we're going to say one is going to pull the other into the same direction. But until now, we are negative, let's say slightly negative to the Swiss, and I want this to continue down, and I have no reason to buy the Swiss franc unless it gets above the 107.68, and I'm looking for it to continue to the downside. So it might drag the Swiss, might drag the euro down a little bit, but the bias on the Swiss is still to the downside. So we're going to be negative the Swiss franc. Okay, we'll be looking at selling the Swiss, and we'll do the pairing in a minute. Last but not least is the Canadian dollar. And we have quite a combination of stuff that's happening with the CAD, so let's put the weekly chart first. Okay, the Canadian is also one as strong as the Japanese yen and the Australian. They're all still in an uptrend. But what we had last week here, we closed the week at 102.16. The structural point that we have is 101.51. We did not, even all of last week, we did not come back to test or trade below the 101.55, even though we closed the week at 102.16, even though it is a red week or a negative week. This is still no sell signal. This is still a buy signal, and our bias in the Canadian would be still to the upside. So we're looking for the Canadian to be strong, and unless it comes below the 105, 101.55, then we are not particularly going to. So we're going to be slightly neutral to negative, so negative to neutral, if you will, on the CAT. So this grading that we had from last week on the Canadian will remain the same. So we're going to be slightly positive to neutral to the CAT. So the way we're going to do it, we want to be long the Japanese yen. So the yen is technically strong, and we want to be buyers of the Japanese yen. So I can be looking at going short the pound yen. I can be going short the Aussie yen. I can be looking at maybe the Euro yen, going short the Euro yen and the Swiss yen. This would be the number one. This is number two in my choice. And then, since the dollar has a buy signal, I really would not look at trading it against the yen, because the dollar is going up and the yen would be going up. So the dollar-yen pair is not really going to go anywhere. And we can also look at the CAD yen. So we're looking at short pound yen, short Aussie yen, short or neutral Euro yen, but at least these two, and we're gonna pair it with the CAD yen. We're not going to touch the dollar yen until we have a clearer picture. Okay, then what we can do is we can look at shorting the Aussie dollar. We can look at going short the pound dollar. We might go long the dollar Swiss, because the dollar is up. We might see if we can going to have a buy signal on the dollar Swiss. We can do the maybe shorting the CAD yen, and then we can look at the Euro pound, going long the Euro pound, maybe going long the Euro Aussie, and we can take a look at the Euro CAD. If you want, I think maybe also the Aussie CAD would be in play. So the pairs we're going to look at going long the yen across the board. We're going to go long the Euro Aussie, the Euro yen, maybe the Euro pound. We can look at the CAD yen, and we can go long the dollar Swiss. These are the general biases of the indices as of for the coming week. Okay, so let me save this, and while I'm saving it, if anybody has any questions,